Hey, hello YouTube, how have you been? I am Chris, I run Elliott Wave Cafe. Welcome everybody. It's been a while since I've done a video. We've been pretty busy here at Elliott Wave Cafe looking at the markets, writing, doing videos, doing trades, all kind of things. But I think it's time that I try to update you here in what I'm thinking. And for that, I'm going to go and I'm going to take the daily drip from yesterday, the one that I kind of sent out to the members, and I want to walk you through it. I think it's important. Nothing really has changed, so I think you're going to find some value in here while we're looking at it. There's several interesting charts in here. I do this every single day. We'll take a look at the S&P 500, the Nasdaq, Dow Jones. We take a look at gold, silver, Bitcoin. We take a look at the dollar as well. So pretty much the core markets where we try to stay in touch with what's happening in the market and, give you my perspective in kind of what's happening. So anyway, this is the chart that I've sent out. This is the main count that we continue to follow in here. Since the October lows, we've turned bullish, basically a lot more bullish in January, around January 23rd. Ever since we kind of broke above this trend line, and the market starting to show signs that it's actually improving. The sentiment was super bearish, so we actually moved everything to the bullish side, and we've been rewarded pretty well. And we've been only trading from the upside since then. I mean, we've had a few short positions on retails and stuff like that, but it was just minimal. So anyway, this is the count that I'm watching. We continue to be in a larger third wave in here. This is the chart from yesterday, July 12th. Yesterday we gapped up. I think this morning we gapped up again, and we were trading, I think, north of 4,500 already. So the market continues to look pretty good. I think that these highs from 2022, I think in March at about 46.37 are probably going to get tagged before this market starts to have a little bit of a pullback. So kind of what I wrote in here was that obviously we have this channel that continued to point upwards. The count continues to suggest higher prices, at least for the remainder of the week. Next week, it's usually kind of pretty negative week in terms of seasonality, but overall I think we should continue to push higher. Then on the lower chart, I looked at the bullish percent index, which is right here, and this one, it's got a couple of interesting points in here, right? So usually when you start to get into the bullish stocks from a point and figure type of signal, every time you get above 70%, you're starting to kind of get a bit worried that the market could be a little bit frothy. Now, here shortly I'll show you kind of what's been happening in the Nasdaq, because up there as well we have a bullish percent index, but that one, it's actually trending and moving kind of sideways like that. So it doesn't mean that just because you're reaching these upper boundaries, you're supposed to sell off, because just like the RSI, you can actually kind of trend and this market could continue to be super bullish, while the bullish percent index just kind of goes along, like for example like it did back in here in the spring of 2021, or even late 2020, right? So but this is kind of one slight point of concern that we're kind of reaching that. And I'm also watching the new highs minus the new lows percentage. I mean, this continues to look pretty good. It's one of the highest levels we've had. If we go back to early last year, I think we had similar levels that we're having right now. It's been pretty bearish throughout, but the fact that we've gotten a lot more black right in here made me stay a lot more bullish on the market. Then we have some analysis on the advanced decline lines. There's no divergences in here, advances minus decline. So these are some of the areas, things that I look for to kind of find out what's happening underneath the market. So like I said, none of these show any deterioration at the moment. We are getting into the upper boundaries, but I doubt that we would see a complete reversal. So just like the RSI, we remain in the upper boundaries for a while. We will further monitor for signs of weakness, but the trend is intact. And then on the third chart, I wanted to kind of show you, these are the 52-week highs that we continue to make in here. I mean, these are, look, what else you want for the S&P? 76 new 52-week highs were made just yesterday. I mean, look at this increase in stocks making new 52-week highs. I mean, there's nothing more bullish than seeing stocks doing those, right? So again, just a quick visual on kind of what happened during the bear market, right, in red, and how many 52-week lows we actually had. That as the market starting to kind of to recover, you know, the number of those continue to kind of get reduced. We had a little bit of a dip back in here, and then again just lower and lower and lower and lower number of 52 weeks, which showed underneath the market we were building a lot of strength. So, you know, again, just a couple of visuals, you know, nothing complicated, but stuff that continues to tell me that we're definitely in an uptrend, and we're probably going to attack 46.37 in here, and then eventually make new all-time highs maybe later on this year. So, you know, going from the S&P 500 to the Nasdaq 100, again, this is the count. I do have the internals, although they're not displayed here, but again, just a simple, you know, 1, 2, then you have another 1, 2 in here with doing a larger third wave. It could be that this third wave is still ongoing. I think maybe we've hit these levels today, because today we had a pretty good move. So that's what's 15,484. Let me take a look at futures. 15,699. So yeah, we're actually past that, you know. So we're pretty good. It could be a slight difference between the futures and cash, but anyway, I think that these levels here are getting hit. I mean, that's 161.8 multiple of this wave 1 in a wave 3, which is beautiful targets for a larger third wave. Will we get a little bit of a pullback? We'll see. I mean, you know, the market has to kind of show us that, but it could continue to push all the way to 16,000 and hit the top of that channel and then come back. Listen, this was the March 22 highs, you know, that line that offered resistance on the way up several times. We gapped back above it, and now we broke it pretty clearly. So what do you think is going to happen if we pull back? That's going to offer support. So there's probably going to be bids already placed up here at about 15,300 to kind of pick the market and take it back to the upside. And then where is new all-time highs? Right here, 16,764 in the Nasdaq 100. So that's not very, very far away. So again, just a few comments in here. I mean, look at this, right? XLK sector, it's about 51% of the triple Qs. Triple Qs, it's the Nasdaq 100 ETF, right? The technology sector is about 51% of that. Now look at the bullish percent index on the XLK, right? Look at this guy, right? So he hit above 70, maybe 75, 72, and then this was back when we were just kind of breaking up here at about 160, and then, you know, he just kind of did this, right, while the market continues to trend higher. So yeah, maybe, you know, it's a little frothy. I'm seeing a little bit of a divergence here in the percentages between the highs, the new 52-week highs and the 52-week lows. But, you know, in terms of advanced declines, you know, continues to look pretty good. So, you know, I'm not necessarily bearish, maybe slightly cautious, you know, but there's other sectors in here that could pick up the weight. So, I mean, I think I have some of them here. So technology, right, 51%. Then you have communication, which continues to look pretty good. You have consumer cyclicals, looks pretty good. You know, you have industrials, a little bit less of a percentage in there. But, you know, between communication and cyclical, you know, that's what, 31%, 32% versus 51. So even if technology pulls back slightly, you know, you have these other two sectors that can kind of continue to drag the Nasdaq pushing to the upside. So again, you know, I will maintain the bullish view until the price starts to show deterioration and internal sectors show weakness. We did take some profits, partial profits in the triple Qs in this triple leverage TQQQ. That was yesterday, and we still have a position in it. We continue to kind of try to run that to the upside. Actually, today in the room we bought China. So I'll give you a little tip on that, you know, and we started to kind of dip our toes into crypto. Some of the things start to look a little bit interesting in there. So, you know, that's kind of what we've been doing in the active positions that we have besides the ETF portfolio and besides the stocks of the week that we run, and all of them were really doing really well. So Dow 30 is still kind of struggling a little bit in here, but it's trying to break 34,500. That's the massive level that I'm looking for it to see if it's going to get taken out. If it does, I think the new all-time highs are coming very quickly. That's going to be at about 36,952. There should be a larger third wave unfolding, right? That's a massive continuation pattern, nice inverted head and shoulder with a big neckline. It would be too upsetting, you know, if this pattern would not break to the upside, right? It's just so beautiful. And, you know, I continue to bet on that we could see, you know, a break to the upside. So again, touch the horizontal line, you know, we need to kind of get above it and close the week above it. That would be ideally. The count is valid, undistorted. It needs to get going though, right? Because you have a series of 1s and 2s. There's a lot more balance in the Dow with financials, healthcare, and industrials, and cyclical. They have some larger chunks. So even if the tech pulls back, you know, the other sectors could perform well, and Dow should stage an attack and open the gates towards new all-time highs, you know, but we just need to wait a bit more. The US dollar, we've been on this, I mean, since the decline, and, you know, I presented, you know, the 61.8 and the pullback in here several times for our members. We finally broke 100. We're trading, I think, 99.50 or even 98. We do have a rising 150-day moving average kind of coming shortly in here, so that's probably going to offer some support, you know. But again, there's a question. There's a couple of questions in the dollar, right? This could be, let's say, if this was a wave 1, and this was, let me see if I can do that again. Okay, that's a wave 1, and that's a wave 2. Then you have a 1, 2, and then it's a very short 2-wave, by the way, right? But very, very short. And then, you know, you look at 3, 4, and 5, and a kind of a massive capitulation in the dollar. Now, there's another thing. This could be a triangle in a wave B position, for example, and this was a wave A, right? Then you have your triangle B in here, right? And now we're breaking lower in C wave, still going to come lower, and then we go back to the upside. And that would be almost like an A, triangle B down in C for the dollar, and then go back. I mean, that would mean, you know, again, massive disturbances in the markets and recessions and, you know, who knows what else. I think it's very premature to think like that, since these markets are very, very close to making new all-time highs. So something bad has to happen to have such a big run into the dollar. So I don't think that's the count. I'm not super convinced that it's necessarily, you know, a 1, 2, 1, 2 also. So it's a little tricky with the dollar. That's some of the comments that I've made on here. You know, but the fact that it's breaking lower, we have to respect that, and we'll see if it's going to come back and retest the breakout zone, see if it holds or if it pulls back, if it's a head fake or not. But I use it mostly as just as a gauge, just as something on my dashboard that I monitor, right? I want the dollar to move lower so the risk assets, you know, could rally. If the dollar stops, then we know we got to ease up on some of our triple average positions, maybe sell some stocks, you know, get a little bit more defensive if the dollar shows us that. Then gold, again, just a beautiful move in here in gold as well, since it broke the trend lines and this channel, you know, made some comments up here as well. You know, it could be the end of the wave too. I mean, if the dollar continues to crash in here, right, this thing could be a large wave too, and I have larger counts into the room. Just, you know, 1, 2, and, you know, you can break new all-time highs and move towards, you know, 22, 2300 in gold. If it's a B wave, that means that it needs a bit more to correct. By the way the dollar is acting, I don't know, but I'm gonna watch this B wave, right? I need to see those fib levels. I need to see some of these moving averages, kind of how it behaves with the dollar, you know, get some signals. But this 1967 was a target ever since we kind of reached these lows back in here. So I'm pretty bullish, especially silver. Silver has been acting beautifully in here again. Just a nice pullback. If that's a 1, 2, and 2, guys, if we're breaking 26, we're going to 40 in silver. And, you know, that might take a while, but, you know, those would be some decent upside targets. I mean, look at the second chart. Look at this inverted head and shoulder, you know, massive consolidation. Looks gorgeous. If you can break 26, you know, you're looking up to 40. So again, just some comment. We're following this every single day into the update. So I think I might I might put some silver positions to work in here. I'm waiting just a little bit more, but that's kind of on my buy list. And then Bitcoin again, you know, finally today it's starting to kind of crack above 31, and it pulled back slightly, but it could be ready to go. And again, I made some comments. We do them every day. There's different stuff every single day, but this is, you know, I don't know if it's going to be 1, 2, 1, 2, or if it's this 1, 2, 3, 4, 5 with the 1, 2 at a larger degree and then a third. What I do know is that the moving averages are all pointing higher, that we broke some key levels in here, you know, and it looks like Bitcoin could start to accelerate and move towards 40,000. You know, I cannot ignore. I mean, this is a beautiful correction pattern. It was more sideways. I would have thought that it was going to pull back a bit more into the fibs. It never really did. Yeah, could it be a B wave forming right now, and maybe we're going to get a C after that, and then we go? Possibly. And if that happens, listen, if I see a nice 5-wave decline in C wave, I'm going to add to Bitcoin and up into the trend line. Sure, if you break below these levels, I don't think I want to get involved. That's about 27, 28K. If we break below those, I think, you know, we could maybe have, you know, just another pullback, and maybe this whole thing was a 1, 2, 3, 4, 5, right? And then you're going to get an ABC back, and then you go. You know, so that's probably that kind of that's kind of where my mind goes next, in case we start to lose some of those levels, right? But for right now, there's no reason not to be bullish on Bitcoin. You know, everything kind of looks pretty good. I know where my defenses are. You know, I know what I'm looking for. So there's not much to do other than to just kind of, you know, let this market. This market kind of continue to work. So hey guys, let me show you kind of what we're doing at Elliott Wave Cafe. You know, you can come up here, you can see the grindhouses, all the position. We've taken 3 new positions just today. Then every single day I update on the active positions, kind of how they're doing, where are our stops, you know, what I sold, what I bought, everything is in here every single day. Plus we have, you know, all the ETFs and, you know, the weekly ETF portfolio, the stocks of the week, how they're performing, you know, what I'm looking at, again, what I'm buying, what I'm selling, everything is in there. Double shot, it's a video every single day that I do, you know, from 18 to 20 minutes, sometimes 15, sometimes 30, depending what I got to talk about. There's a lot of information in here that you know, really help, you know, visualize kind of and where the markets are, what I'm thinking, and we follow numerous markets in here. So I think it's kind of the best product. Then I have the steam room where there's a lot of technical analysis on different things. You know, obviously the course, which is, you know, we got to have this one. It's a 7-hour detailed Elliott Wave course. The daily drip is another one that's pretty successful. That's just what I've showed you, and that shows, you know, everything on every single day, kind of what's happening in these markets, where the counts are with comments and what I'm watching. So listen, it's you know, come and give us a try. I mean, you can try us out for a month if you like, you know, but that's kind of where I'm at. So again, sorry for being absent of, you know, YouTube for a while. We might try to do this a bit more often, but thanks you for watching. Thank you for being here. And I'll talk to you later. Bye-bye.